in this video, we're gonna look at one of the main reasons why you may have gotten your mortgage application declined from a lender, from a major bank. So let's get to it. For employed individuals, most lenders will require a combination of these four documents: pay stubs, employment letter, notice of assessment from CRA, or T4 slips. Of course, if you don't have all of them, that could be a reason. So we'll have to overcome how we can show to the bank the consistency of the income. Sometimes you can get a decline because the documentation is not consistent. So the pay stubs show a different income than an employment letter. Most of the time, a brief explanation will make sure that the underwriter at the bank understands and get approved. A lot of the times, a lot of people do not get the amount that they get because they cannot overcome the following. The pay stub shows a lower income, but in the previous income, because overtime, maybe bonuses or something, is not accounted for. And that's where the T4s come into play. Have in mind that a lot of lenders will not use the notice of assessment, because if the notice of assessment may show long-term income, which is employment, but they may also show, for example, capital gains. If you sold stocks or bonds, or you had a property sale, the notice of assessment may show a higher income, but it's just a one-time related aspect. So all of these things could be troubleshooted, and basically with experience, you're able to solve them over time. So if there's any of these issues happening to you and you cannot overcome it, call my office and we'll make sure that we can use higher income and get you a higher approval, or overcome the issue that you're dealing with. For self-employed individuals, sometimes this is even harder because the bank will require tax returns, so your T1 generals for the last two years most likely, sometimes 3 years if it makes sense to bring a point to bring a mortgage approval higher if you need more money. If you have a company, they will want financial statements. The reason why they want financial statements, even though the company is not going to guarantee the loan, it's because the bank knows that you are employed by your own company. So they want to make sure that your own company is in good shape. It's in normal standing, because in the past, some individuals have taken money. For example, they have borrowed heavily on the company, so the company cannot sustain itself in the long term to provide short-term personal income to get an approval for a mortgage. So the bank just wants to double check that everything is looking good and it's in order. And also they may want to see bank statements to verify income, for example, from invoices, from deposits for the current year that is not yet reflected either in the tax returns of the financial statements. As you can see, there's a lot of moving parts. So you have to work with an individual that understands tax returns, and I can go deeply into tax returns, go line by line, understand how that tax return was filed in order to bring more income to the application, and explain to the underwriter why the loan might be approved. Have in mind, when you go back directly to the bank, when people are working for a bank, sometimes they just check boxes. So if you go to a bank and you submit all these documents and the bank declines you, don't get discouraged, because you just need an individual that is professional, that does this for a living, to go into the details. I've gotten applications with major banks declined. They come to me, and then I go into the little details. I build up a case and I submit it to the same bank that got a decline, and I get an approval. Why? Because I explain. I go into the detail and the time to explain why the income should be calculated in a different way. And then the bank understands. The previous person that declined the loan, they just check boxes. They just look at maybe one number. Oh, this is not enough. And decline the file. And when you go into the details, is when applications can be made or cases can be built. Also, there is lenders that specialize with business owners, and they may want to see different things and approve the loan in a different way than a bank. Those lenders, I will only go when absolutely there is no solution for the client.
because usually the rates are a little bit higher, and there might be fees associated with setting up the loan. But we'll make sure that we will review all the options, and you're presented with all the options so you can decide what is best for them. There's also important, this is very important, there's also government programs that you can apply, where the government will help you because you're a business owner, help you qualify for a mortgage. Okay, and not all banks work with those programs. Okay, so this is related to self-employed, some of the reasons why you get declined and some of the solutions. Now, in the next type of income that you may have had issues is rental incomes. Some lenders will require, when you're buying a rental property, that the property is rented. How crazy is that? If you're buying the property, you don't have a tenant yet. Maybe the previous owner lived in the property, and they still require a tenant agreement. And some people go and get discouraged because this cannot happen. No, don't worry about it. We can use a Schedule A, which means that we'll send an appraiser or a rental appraiser that will appraise how much in the current market that property can be rented for. And when you show that to a bank, a lot of banks will accept that because they know that you buy the property and you're going to leave it empty. You're going to go ahead and start advertising to bring a good tenant to your property. So those regarding lease agreement and some of the things that can happen with that. As well, the way the banks calculate that rental income is super important. I know we are all focused on rate, but sometimes the bank who give you the lowest rates may not be able to give you the amount that you need to qualify for that rental property. Why? Because the rental calculation is different. They may not use an offset or an add back. I don't want to get into the details of that, but some banks, an add back means that they add the rental to the income, which is more difficult to get the loan approved. If it's an offset, it means that they actually are doing like the homeowners thinking. You are thinking cash flow. So if this is my rent, $3,000, my mortgage payment is $2,500. Okay, so I have $500 to pay for the taxes and the insurance and all the other expenses. That's how a real estate investor and a homeowner will think. And some banks think cash flow that way and will use most of the rental income. Will look specifically, if you already have rentals, to the form of the statement of real estate rentals within your tax return, and that will give us a lot of information. Some lenders don't even look at that form, and that's why it gets declined. When we go into the details, we can make it happen. And of course, some lenders will want bank statements to show that the rents are deposited and what have you. Okay, so these are some of the issues with rental income. Now, there's some other individuals work commission based, and when you earn commissions, you tend to think that the bank will accept the full amount of your commission. So if you made $200,000 in commissions, you think that the bank will accept that. No, a lot of banks will deduct all the expenses, because you're allowed to deduct expenses on your tax return, and will use only the tax return net income, which may be not enough for you to get an approval. Some other lenders may use the full amount of commission statements. Again, it depends on the program you apply. Rates may be a little bit higher, but you may be able to get the approval. And commission based is something that you need to be aware, because as your income fluctuates over time, the bank not only will want to see how much you made in the previous year, but also the history of commissions, because they want to make sure that you can sustain that over the long term. Okay. Now, let's go to the next one, pension and disability income. All this is accepted by a bank if you have pension statements, either private or from CPP or old age security. That income will help you support your application. Even if you're employed and you have OAS or CPP, yeah, you can use that income and improve your application. As well as disability income. With disability income, if a person is in disability, the bank will definitely use the disability, but there is a caveat. There's something you have to be aware. Is that short-term disability or long-term disability? When it's long-term disability, it's crystal clear, because we can provide documentation in terms of bank deposits and statements from the disability or the insurance company to verify how much income you're making and thus improving your approval. But if it's short term, we need to understand what is going to happen after the short-term disability, because when you get a mortgage, it's a financial product for the long term. A mortgage is not only for 6 months, a mortgage is for 5, 10, 15 years, even 25 years. So the bank will want to make sure that if you have short-term disability, what is going to happen after your short-term disability runs out? And we cannot just say, well, we'll go and find a job. They want to make sure today that there is a plan in place and there is proof that you will get into a certain income, and they will use that income for income approval purposes. This is something that not a lot of banks look into, and you can get approvals done because you have an investment income. If you have dividends from stocks, bonds, and they're declared in your tax return, sometimes if you're employed, the bank will only use the documents that we showed before, like the letter of employment and the T4s, and this income is not shown on those documents. So you think, why this bank approved me for 500,000 and this bank approved me for 600,000? A lot of time has to do with going into the details. If I ask you, do you have investment income, and you say yes, and I only ask you for the T4s and letter of employment, then there is I'm not doing my job. I need to go back and say, if you need a higher mortgage amount, or we need to provide proof of investment income, I'm going to go ahead and I'm going to ask you a little bit of additional documentation, like the T5, which shows the interest income or dividend in a year. I would ask for bank statement and investment statements, and I will build up your application and will add both incomes to support your application. This is something that most people, or a lot of banks, will not take into consideration, but that can help you increase your chances of an approval or a bigger approval. Now, there's other support income that we can use to increase your mortgage amount, or to simply give you an approval, which is when a person has a separation agreement. Sometimes there is alimony payments, there is support payments to the spouse. We can use that income, given that we have a normal separation agreement or divorce agreement. We can also use, for example, government programs like child support, given that the support is for a longer period. If the support income, like child support, is going to run out this year, the bank may not accept it, or will not accept it in most cases. But if your kids are young enough and you have proof that you're receiving that benefit from the government, we can use that as income to support your application, along with self-employed, along with employment income or other incomes, and we all use that to give you better chances to get your approval. So these are some of the additional income that you can use for an application. Okay, one that I haven't discussed here, I'm just going to touch briefly. If you're a business owner, this is really important. If you're a business owner and you're leaving income in the company, and we're going to go back to the previous here, maybe self-employed. If you leave business income in the company, you don't take it personally. A lot of lenders will not use the business income because that income belongs to the business, not to the personal. But you don't want to take it out because you pay a lot of taxes, and then what do? Well, we have a very, very good solution. We can use also company income or net income to support a personal application. Okay, so you have the cake, or you have the cake and you can eat it too. So you can do kind of double dipping. So a lot of lenders that I work with will, if you show it properly and package properly, you can show the net income of the business and add it to the personal income and get a way higher approval, and you don't have to pay taxes or as much taxes on the income that you leave on your business, because there are programs, and that's one of the reasons why people incorporate is because you pay less taxes that way. So this is really important, and I wanted to make sure that I made a note on that. So additional notes, very important. Documents need to be current. If you have a letter of employment 6 months old, we can start the application with that, but the bank will require a current one, usually within 30 days. All the banks are cross-verifying information. Sometimes they're even sharing information among banks. So you need to be very careful. You need to be upfront and work with a professional. Just tell me everything and I will understand and mitigate what issue you're having and bring additional documentation to support your case. And super important point number 3 here in this slide, consistency. They want to see that your income is consistent. If one year you do 50,000, the next year you go 250,000, the third year you go 20,000, the banks get scared about that fluctuation. We need to find a way or work with your accountant to kind of level the income, or they will use averages as well, but it will require additional work on our part to justify the case to get you the approval. In summary, there is so many ways why an application can be derailed because of income. Do not get discouraged. That doesn't mean that no bank will give you a loan. A lot of people assume that because you've been declined, that means that all the banks will decline you for the same reason. Nothing is further from the truth. We can package in a different way. Banks have different guidelines, income guidelines. Some banks accept something, some banks accept another one, and I think it's worthwhile, uncovering all the stones, looking under all the stones to make sure that you have the right mortgage for your property. Remember, we just have to find one lender to get your approval, and then you are a happy camper, and we are a happy camper. Please contact our office if you're having issues with your bank or you want a second opinion. We love somebody on my team or myself will reach out to you and will analyze your situation and see what other options and solutions we can get to you. All the best. Camilo Rodriguez. I am the past president of the BC Mortgage Broker Association, husband of 2 beautiful kids. I love my wife. Soccer lover. I love soccer. I love the Whitecaps. I follow Real Madrid. Sorry, Barcelona friends, but I follow Real Madrid. It's my favorite team, and I really love and enjoy what I do, and I want to help you get or build assets with debt. Build assets with debt. Improve your financial situation with debt. All the best.